Information shared on the following program is for general information purposes only. It does not constitute legal, tax, investment, or other advice, nor is it intended to recommend any particular investments, products, or financial instruments. Always seek advice from your financial advisor, attorney, or accountant with regard to investment, legal, or tax questions.
Until she lost her job, Kathleen Coleman had spent nearly 30 years working as an executive assistant on Wall Street. She doesn't have much to show for it.
Tell me about your 401k.
Does this answer the question?
This is what it was in 2005. 2007, you're down below 2005.
Right. Another one went down almost $40,000. One was
Right.
88,000, and then it went down to like 50.
Why continue to risk your retirement savings when you don't have to? Stay tuned as I share with you the 4 safest places to invest your money in the 21st century.
Welcome to the Worry-Free Retirement with best-selling author and fiduciary Tony Walker.
If you got it, you don't need it. If you need it, you don't got it. You don't get it, shame on you. Funny, funny, funny what money can do. Them that have it get more of it. The less they need it, the more they love it. And it sticks to them like glue. Funny, funny, funny what money can do.
With the date of today's recording being May 5th, 2020, and considering that just a few weeks ago the stock market dropped nearly 30% in just a few weeks, once again, we are reminded of this fact. The stock market is a risky place to invest your retirement savings, especially for those who are retired or nearing retirement. As someone who has been licensed to sell stock market products, we refer to those as securities, for more than 35 years, here's what I've consistently noticed about the stock market. It goes up and it goes down. And no matter how smart one thinks they are, nobody knows when it will go up and when it will go down. So as a result, I have personally witnessed drastic losses to savers' 401ks, not once, not twice, no, not even 3 times, but with this recent 2020 coronavirus drop included, 6 times have I noticed this stock market collapse in our environment. And this latest downturn in 2020, well, it brings us to the million-dollar question. When it comes to investing your money for retirement, why do savers continue to risk their retirement savings in the stock market time and time again when they don't have to? Well, we at Tony Walker Financial have a proven way to take care of that problem. And the answer? Well, it may surprise you. Well, welcome, folks, to the Worry-Free Retirement. And yes, I am that little man in the sweater vest, safe money specialist and fiduciary Tony Walker. And today and for the next week, possibly the following week, I'm going to cover in great detail not only a little bit about our economy and what's going on with this stimulus, which is very, very important to understand as it relates to the stock market and your 401k, but also we're going to talk about the 4 safest places to invest your money in the 21st century and how we at Tony Walker Financial can show you how to use and enjoy your money before it's too late, and more importantly, make sure you don't run out of it as a result of a stock market correction. But as always, before we get started, let me introduce none other than America's favorite financial sidekick, Mr. Aaron Orander. Good early morning to you, Aaron.
Hey, good early morning to you, sir. How are you?
Good, and doing great. And we've got Megan back. Well, she's been at the helm, but she's been at home at the helm, and now she's in our home at the helm. We're going to be talking a lot about homes.
She's back in the station.
Yeah, she's back in the station, and glad to have her back, and just working diligently on our TV show coming up. Folks, in case you're just now joining us, never heard of us before, we have a radio and TV show. The TV show as well is called The Worry-Free Retirement, but let me encourage you to watch that TV show because we have some great graphics. I think the radio show, you would agree, Aaron, most people say they learn a lot, but I think when you visually see things, wouldn't you agree, it's just easier to understand.
I think it just sticks with you better.
I agree. I mean, they say the best way to learn is to see and hear, not just hear or not just see. So anyway, the radio shows, you can listen to past episodes on that, but more importantly, the TV show, all of the schedules of the upcoming TV shows, we're on 8 different stations now, can be found at TonyWalkerFinancial.com, and you can even watch past episodes on our YouTube channel at Tony Walker Financial. Is that at Tony Walker Financial again, or Worry Free Retirement? I always forget that on YouTube. Eric.
It's at Tony Walker Financial.
Okay, good deal. All right, so here we are. We're recording this show again. Make sure you get the dates. Boy, aren't you glad we've used these dates, Aaron? If you realize how quickly things have been changing. Woo! So, yeah, our schedule, folks, we record a show every week, and we're about 3 weeks in advance. So with all this coronavirus, man, I've even listened back to some of our shows when they're coming on live, Aaron. I'm like, boy, I'm glad we gave the date because things have changed. Have you noticed that?
Yes, absolutely.
Wow. But anyway, 401ks, there they are. And what I've noticed over the last several weeks, folks, and I get it, I do not begrudge anybody for being nervous about what to do with their 401k. And let me give you an example. We have people all the time. I mean, in the past, just call all the time, go to the website. Hey, Tony, I got a 401k. I want to roll over to you guys. Hey, Tony, I want to sit down and get a game plan. I'm thinking about retiring. And although we've had contacts from people, Aaron, I think people have just kind of been paralyzed.
I agree.
Yeah, and I'm okay with that. But hopefully by the time this show actually airs, things will have cleared up. People will be back to work. The economy will get, at least people feel a little more confident. And we can get back on our, I guess you could say, our track. We help a lot of savers move money from 401ks over to our process. And that's what we're going to talk about today is this notion of why in the world, especially after going through another reminder of a stock market correction, will some of you, although you were fearful and fretful, I heard from you, you'll just leave your money there. And when you are retired, folks, or nearing retirement, and assuming you're a saver, remember this show is dedicated to savers, and this market corrects itself, and then when it gets back to near where it was before the correction, my suggestion is to really, really take stock of what you've just gone through. Now, we were talking about this briefly after our marketing meeting yesterday, Aaron. You know, I don't think you heard me say this. What do you think of all the things I've created over the years, all the books I've written? What do you think the one creation, I don't mean to make it sound like I'm a mad scientist, but one thing I've created that I believe has been groundbreaking, but to be honest, doesn't seem like a lot of people have really picked up on it. What one concept? I wrote a book about it. I've got a website.
Oh, I would say your 5-step worry-free retirement process.
That's pretty close. Try another guess. Starts with the number 3. Ends with a letter. What? I'm just teasing Aaron. Aaron, it's too early. Aaron's like, gosh, Tony, you always do this to me.
I'm trying to think.
3 personalities of money.
Oh, your personalities. Yeah, okay.
Yeah, because we talk about savers. Folks, this idea that you fall into predominantly a camp. I used some psychology professors to help me with this. We did independent testing. This is not something I cooked up on the way down from Bowling Green to Louisville. I'm driving down I-65 one day. So basically what we have learned over the years, and if you're listening to this, okay, you're either predominantly, you can be a little of both, but you're predominantly either a saver personality. A saver is defined as more concerned with the return of their money than on it. You're either an investor, which you enjoy research, you enjoy calculated risks, you don't mind what's going on with the market. Well, you might mind it, but you expect it and you understand it. I love that quote. We put that up a lot from the late, great John Bogle. And an investor, this was a good way to define an investor to me. John Bogle says, if you're not willing to lose 20% of your money overnight, you probably don't need, and that's what he means. I mean, an investor understands this can happen. Savers may understand it, but they don't like it.
Yeah.
And then the final category we learned about, which we saw very, very few of these folks, are called speculators. So right now, let me remind you, I wrote a book about this. It's a very, very quick read. It's called The 3 Personalities of Money. You can get it at Amazon.com or on most major booksellers. I really encourage you to get that book. Then it's a free test. You can go to the number 3personalities.com, 3personalities.com, and take a free test. It takes you about 5 minutes, and really this test was to help people determine what their financial personality is. So again, following our meeting, Aaron, I was talking with my favorite nephew, Wes, and my favorite son-in-law, Trey, and I said, we really just do not help people understand this personality business because it's money. The money business is funny, folks. It's the only business out there where everybody's supposed to invest or do the same thing. And this is so silly. You couldn't get away with this in any other business in the world. It's almost like, well, they said when Henry Ford created the first car. Now, he got away with it because there was no other cars. But did you realize he wanted everything black? It was the same car that rolled off that line. Yeah, but it's the only car. So that's all you could get. Okay, we'll all buy a black car and it looks the same. Wonder how many, you want to guess how many automobiles are out there, different makes,
Yeah,
models,
really.
colors? Thousands, wouldn't you get? There's got to be thousands. That's because no two people are quite alike. So quit treating your money this way, folks. Quit imagining that just because somebody says you've got to have all your money in the market, and that's what everybody else is doing, you do the same thing. So that's the first thing you need to do. If you're going to consider working with an advisor, make sure you understand who the advisor is. What do they specialize in? A lot of advisors specialize in working with investors. There's nothing wrong with that. We don't. We specialize in working with savers. So let's kind of get back to what's going on here. We'll take a quick break. I'll be right back. But let's understand what is going on here. So again, you've been told that you have to put your money at risk to make it. You've also seen this effect of something called inflation. We have to understand inflation before we can understand my philosophy of live well, die broke. Because, folks, if you don't put your money in a position to use and enjoy it while you still can, and then also make sure you got some mailbox money, if you're a saver, you will worry about money in retirement. So this is why Wall Street, I'll give you an example of this before we take a break. Trey took a phone call. My favorite son-in-law took a phone call the other day, Aaron. Here's what the gentleman said. I've been watching that Walker fella on TV.
That Walker guy.
The Walker guy, the guy in the sweater vest. But anyway, he said, he seems like he knows a lot about retirement. And Trey said, well, yeah, he does a lot of retirement planning. What can we help you with? And he said, well, I went to my broker. He's been with this broker for years, likes him. Apparently he's a nice young man that he works with. And with the recent stock market correction, his account's down. I think he said it's down from $500,000 to $400,000 or whatever it is. He told Trey, hey, I'm 65. I want to get out of here. And I want to retire. So I went and told my broker I want to retire and let's get this going. And he looked at me and said, no, you can't retire. And he said, well, why can't I retire? And he goes, because your account's down. And he said, I know it's down, but I want to retire. And he said, you can't retire now.
You got to make that up.
You got to wait.
Yeah.
And he's 65. I mean, and Trey said, I couldn't help it. I kind of laughed. And Trey said, just come in to see Tony. He said he deals with this kind of stuff all the time. He'll tell you for sure whether you can retire or not. So, folks, if you're sitting there and you're thinking, you know what, I wonder if I could retire. Or, I was just laid off and I've got this 401k and I really don't know what the heck I'm doing with it. I'm tired of putting it at risk. Why don't you consider talking to me in person? It's easy to do. We can do it by phone. We've got this great video chat system. In fact, you can do a video chat online and set up an appointment. Have you seen our website for that?
Yeah.
It's awesome. And actually, Trey will do the initial appointment. It's more of just a fact finder, what do you want type thing for 10 minutes. And then, of course, we are open for business. We're making sure the offices are very, very safe. So we're only allowing one set of clients in at a time. We've just got a great operation here. So you can meet with me in person. That's not a problem at either our Bowling Green, Lexington, or Louisville, Kentucky offices. So make it a point. Let's do something now. Log on to TonyWalkerFinancial.com and let's get started. All right, when we come back, I'm going to talk about mailboxes. It's kind of mailbox money, and then I'm going to tie it together with Hershey candy bars, Aaron. Hershey, don't you? And I saw you looking at these. These are props.
I like Hershey candy bars.
Yeah, these are props. You're not to eat these
Not
props.
this early, though. I can't eat that this early.
And then we'll close out the show with the 4 safest investments for the 21st century. You're listening to The Worry-Free Retirement. I'm Tony Walker. I'll be right back. Have you recently retired, been laid off, or offered a pension buyout? Has the company you work for moved, been acquired, or closed its doors forever? And finally, do you have a 401k with a previous employer you'd like to move to safer territory? Then take advantage of this opportunity to move your 401k or lump sum pension to Tony Walker Financial. Let's meet in person to discuss your retirement options. Log on now to TonyWalkerFinancial.com to schedule your free, no obligation appointment. Let us help you today. Welcome, and with us in the studio is our own Shannon Ross, all the way up from Bowling Green. Shannon takes care of all of our investments at Tony Walker Financial. First of all, Shannon, welcome, and thank you for making the drive up from Bowling Green today.
My pleasure.
I think back to when you got started. It's been, how many years have you been with Tony Walker Financial?
3 years this past January.
And tell everybody a little bit about your background prior to Tony Walker Financial.
Okay, well, I got my graduate degree in public administration, and then I have some background in higher education, And then I've been in the financial sector for a little over 5 years now.
And lucky for me, the gentleman you worked for in a neighboring county, he retired. Is that correct?
That is correct. And then I happened to see an Indeed ad for Tony Walker Financial, and it's just been wonderful from there.
And we are so pleased and proud of your hard work. Since you started, we launched the Charles Schwab platform about the time you came on board. That's one reason I was looking for your experience. And as of the date of this recording, I think we're up to over 1,100 accounts. And how many? What do we got under management right now?
A little over 92 million as of yesterday, closed market.
And how many times during the week, I'm all about getting people their money back. You know I'm a big proponent of spend and enjoy your money. How many times a week do you set up accounts and then have that money distributed back to those people through our link system we use?
Sure. I opened over 40 accounts in January, and I would say on average, I do at least 10 distributions to folks on a weekly basis, just people needing money out of the blue for this, that, or the other. Mm-hmm. And then, of course, we have folks that get money on a monthly basis, recurring same day each month.
And how easy is it for you as our investment administrator to work with Charles Schwab, our current custodian? And what is the reaction from people when they see how easy it is really to get their money back to them?
Well, Charles Schwab is leaders in the industry. They're pioneers in the field, and so they make my job that much easier. And the process is pretty simple, and folks are usually surprised at how simple the process is. So if you call in to request money from your account, I'm going to verify your identity and the details of your request, and then we can usually have the money in your bank account within 3 business days.
Yeah. Well, Shannon, thanks so much for joining us today, and thank you for all you do for our clients. You're a very hard worker, and we're very thankful to have you, so thank you.
All right. Thank you.
Welcome back to the Worry-Free Retirement. And in the break, last week, Aaron reminded me, we actually did talk about our mailbox money concept and what happened if you walked out and found free money in there and everybody else had free money. But I've got to talk about that again. I'm going to use a different analogy. Here's the thing, Aaron. I went to see my mom last week up in Lexington. We were getting ready to sit down for a luscious plate of bacon and eggs. Oh, the thought of it. It was good bacon again, too. She's found some good bacon lately. Remember, folks, in my book, Live Well, Die Broke, you ought to get it. Great book. One of the chapters is Life is Too Short to Eat Cheap Bacon. And it's the theme that runs through my life now as I get a little older and watch a lot of my clients who are older, kick off and die or going to nursing homes or coming to me saying, Tony, boy, I wished I'd enjoyed more of this money sooner rather than later. I can't enjoy it now. So that's the whole theme, folks. You have to position your money with an advisor who wants to get the money back to you. That's the problem, Aaron. All these fees that have been set up by Wall Street, everybody works on a fee basis. Well, if I'm getting fees on your money and you come and want to take that money back, my natural reaction, right? Yeah. That's going to affect me.
Well, that's going to affect me. I want those fees.
Yeah.
Just keep your money where it is.
So it really and truly, again, we charge fees on our Schwab. Don't get me wrong. There's nothing wrong necessarily with fees, but it taints very easily, I think, advisors who all of a sudden forget because they get so used to that income stream coming in on their fees, they forget this is the client's money. It's not their money. And the client should be in there telling the advisor what to do. The advisor's role, through hopefully they got expertise in retirement planning, can help them navigate what to do with this money when they need it. So this is what I'm training, folks. I've spent my life's work trying to understand this, and I think I finally figured it out over the last several years. And that's why we created our own software. That's why I have all this staff. We want to get this money back to you, obviously prudently. We're not going to just throw it out in the wind here, but we want to get it back to you so you can use it and enjoy it before it's too late. Okay, so my mom, we're talking. She loves the radio show, the TV show. She watches it and listens to it up in Lexington. And something came up again about inflation and the stimulus. And I was trying to tell Mom, I said, Mom, I just really worry. It's up to almost $3 trillion. Did you know that, Aaron?
I did not.
They've added some more to it. So, yeah, I think
the last time we talked about it, it was like at $2.2 trillion.
Yeah. Well, they've added to it. And I think by the time everything shakes out, I think states are wanting more money. I'm just going to round it off. I'm going to say our deficit this year will be well over $3 trillion. Last year it was $1 trillion. Probably even higher than that because we don't have much tax revenues coming in. But I was trying to explain to my mom, Mom, I know it doesn't seem like it really affects your pocketbook now, but it does. And in the future, it's going to put a whammy on it. So she's still trying to understand. So, folks, again, I'm going to talk about this on the TV show and illustrate it, but I can still illustrate it right now. I've got my props here. Back in the radio days, everybody used props, didn't they? Can you and Megan come up with some sound effects? And stuff? Remember how they used to have the horses running with Roy Rogers and all that stuff?
What noise do you make for chocolate? I guess.
That's what I say. I love chocolate. Okay, so here's my props. I've got a quarter. See that, Aaron?
Yep.
I got a little tiny Hershey bar, okay, and then one that looks just like the little one, but it's probably, 8 times the size.
Right.
Okay. So we'll go back into 1960, right? And let's imagine you've got this quarter in 1960. You with me? Okay. You weren't born in 1960. I was. This quarter in 1960, if you found a quarter on the ground, it was worth a lot of money. Here's why. In 1960, this quarter would buy this big piece of Hershey's chocolate. Are you with me?
Right.
A quarter would buy a big one. Okay. Now we're in the year 2020, 60 years later. And this is the sole reason. There's a lot of reasons, but the sole main reason, because the government continues to borrow money and print more money, that infuses money out into the public, that allows people to build more, create more, and here's the key, spend more, because there's more money. So from the standpoint of the law of supply and demand, if I know everybody's got more money, I can raise my prices. Now, if I have to raise my prices, though, I got to pay more salary to the workers. My suppliers want more money. See, it just goes on because there's more money out there to be had.
Yeah.
Okay. See, with the money supply getting cut off now, what are you finding interesting? I went over to Lacey and Trey's last night. Are people jacking up prices, or are they working deals right now?
Right now, it seems like a lot of places are working deals.
Right now?
Right now,
why?
because...
Why? Stop it, why?
Because they haven't been doing business for the past 2 months.
There's no money for them.
They need money.
They need money. Bingo. There you go.
Jess and I are thinking about going and buying a new car. Why? Because they need money.
I won't give the restaurant. We ordered yesterday from a pretty nice restaurant, and they delivered, free delivery. Well, they're not going to do that normally.
Nope.
Now, they said they do it because of the coronavirus, and they're being nice. They did that because they want our business.
Right.
And nothing wrong with this, folks. By the way, nothing right. Listen to what I'm saying, though. You have to understand this. That's what we call supply-side economics, okay? That's when you hear that term, that's what they're talking about. Now, fast forward to 2020. That quarter hadn't changed, has it? It looks just the same. Okay, it was
still worth 25 pennies.
25 pennies, there you go. But now, unfortunately, it only buys a candy bar about twice the size of my thumbnail.
Right.
So you have to say, well, what happened? Hershey's, this candy bar, Aaron, wrapped up, it's the same candy bar, just a different wrapper. And back in 1960, it had the same wrapper, I bet the same ingredients, the same everything. And one might argue, the technology to produce this candy bar, I bet, is better now than it was in 60. Right?
And it's expanded. They've probably had more warehouses, like you're saying. They're hiring more assembly line workers, more workers in general.
Yeah.
They've got to pay all those people.
That's right.
Yeah.
It just goes on and on. So, folks, what happened was when people say inflation and people worry about interest rates, it's not really the interest rates that drive everything. Now, the Fed is keeping the interest rates down so we can try to pay back this debt that this country is probably not going to be able to pay back other than increasing taxes one day. But just think about that. So what I'm saying is, folks, as this money keeps getting infused into the public, and as you keep getting older, listen very carefully, life is getting shorter. So you have to meet with somebody who understands the world of money. But more importantly, here's the key. You don't need a money manager. Most money managers do not understand retirement planning, nor a lot of them do not understand economics. Most wealth managers do not understand retirement planning. You have to work with somebody that is a retirement planning specialist. Well, how do you know if you got a fiduciary that knows retirement planning? They provide you a written game plan. If you don't have a written game plan and you don't have a knowledgeable retirement planning specialist, you basically ain't got a retirement plan. Now, you still may make it. You still may have plenty of money, but you're going to worry if you're a saver because you don't have any evidence that you're going to make it. That's what the game plan is. So let's get a game plan. Log on to TonyWalkerFinancial.com right now. Let's get started. And, look at the times running. I'm having more fun with this show today. I don't know what it is about this. I think it's just, I think what has happened to me, Aaron, now that we're kind of getting through this, and quite, me, quite frankly, I've been very, very aggravated with our political.
I know.
I think this has been a bad move from day one. I've tried to approach this from an economic standpoint, and when I heard the politicians were closing businesses, what did I say? I said, bad move.
Yeah,
you
not
can't
a good
do
idea.
This. Can't do this. And then also, from a mental health standpoint, I got a degree in psychology. I almost went into that field. My dad was in that field. My brother's in that field. My son's in that field. I know that field pretty well, too. I said, you keep people at home and not allow them to work and do things, you're going to have a mental health catastrophe on your hands. So I think that's why we're seeing people just all of a sudden just go back to work. And you're seeing them, I don't think they're really protesting. I think they're about at their wits' end. You cannot just take people and tell them to stay at home and, as we say, walk around the park every day. Unless you maybe are retired and you're used to that.
If you're retired and that's what you want to do.
Yeah, my mom loves this. She's like, my lifestyle hasn't changed. But anyway, it's just funny. So let's get right to it, because we're going to set the stage over the next the next 2 weeks. It's probably going to take 2 weeks the way I'm going, Aaron.
Okay.
Over the next 2 weeks, we're going to cover for you the 4 safest places. And we do all of these investments at Tony Walker Financial. So don't think we're going to give you information and then you're going to be left in the dark as to who's going to help you. We can help you do this. So there's basically 4 safe places that I believe in the 21st century are going to be right for savers. Let me name the first category, and then we're going to cover these over the next 2 weeks. First and foremost, bank instruments. Now, folks, I know some of you are put out with the Fed and the bank and Wall Street, and you say, well, aren't those people all colluding together? I mean, they're just loaning money to each other and keeping the rates down so they can loan money, and I only get 1% on my CD. Folks, listen, currently anyway, banks do have some protection under FDIC. Banks, you can usually get your money out very, very quickly, unless somebody made a run on the bank. That hadn't happened in years, but in general. And you need money in the bank if you're a saver. Now, we can do actually money markets and one-year CDs through our Charles Schwab platform, so we can help with that. Tony Walker Financial does that. The second category, and remember, folks, we're looking for things that have protection built into them. The second category is government bonds. Now, government bonds, people say, well, golly, Tony, you just got through talking about all the debts and deficits and all this stuff. Well, you got to remember, folks, the government still is the one that makes the laws. There's an old saying about that. The one that makes the rules gets the gold. You ever heard that one, Aaron? Yeah.
Yep.
So, I mean, I don't think I worry too much. I'm talking about safety now. Now, can government keep interest rates at zero? And would we maybe at a point not even get any money for a government bond? That could happen. But again, we're talking about safety of our money so we can use and enjoy it. So, yes, we can get government bonds inside of our portfolios, and I have quite a bit of money in government bonds right now. Remember, I'm a saver, folks. I'm not out here blindly throwing my money around. I don't like to do a lot of investing. We have investments for people, but that's not my personality, all right? The third one is one of my favorites is actually insurance contracts, namely fixed, not variable, fixed annuities, fixed indexed annuities, immediate annuities, and then what I call dividend participating whole life insurance. These are wonderful tools, totally protected, and yes, backed by some of the strongest institutions in the country, insurance companies, which incidentally are highly regulated by state insurance departments. So that's a good category. And then finally, this is going to surprise you a little bit. Finally, dividend-oriented ETFs, or what we call exchange-traded funds. Now, they can have a little bit of risk, don't get me wrong. But the idea of the dividend ETFs is over the long term, if you have a small amount mixed in, again, if you're okay with a little bit of risk, they pay good dividends, meaning you have income coming from them, and they're diversified and very, very low cost. So those are the 4 categories: bank instruments, government bonds, insurance contracts, and dividend-oriented ETFs. And yes, at Tony Walker Financial, as fiduciaries, we are licensed to provide all of those products within the worry-free retirement game plan. So what are you waiting for? You're sitting there right now. Maybe you have a 401k. If you're thinking about an annuity, got an old annuity you don't understand. Maybe you don't have anybody to help advise you on anything. You got a bunch of money in the bank sitting there with no plan of action behind it. Take action right now. Log on to TonyWalkerFinancial.com. Incidentally, we will do everything for you. We'll help you get organized. We'll help you lay this out. We will meet with you in person. We will make sure that we do all the detail work. So don't be intimidated by this process. We're very good at what we've done. We've helped several thousand people become clients of Tony Walker Financial, and we want to help you too. Oh, one more thing real quick. I know we're about out of time, Aaron. The brand new booklet's out. It's on the homepage. 401k Rollovers Made Easy. Folks, this is a great book, so if you're wanting to consider rolling your 401k over, want to know all the pros and cons, 401k Rollovers Made Easy on the homepage at TonyWalkerFinancial.com. Well, until next time, we'll look forward to talking to you more about the 4 safest places to invest your money, but between now and then, you remember, if all else fails, be worry-free.
If you got it, you don't need it. If you need it, you don't got it. You don't get it, shame on you. Funny, funny, funny what money can do.